the key institutional milestones or milestones for Bitcoin. And as you went through your historical review, it jogged my memory, and I thought Fidelity started offering digital asset services like late 2019, right? And I think that the entry of Fidelity into this space was a big game changer. You just showed a chart by an analyst, Jurian, from Timur from Fidelity. And of course, Fidelity manages $10 trillion or more worth of assets. So I thought that was an important endorsement. I think that when MicroStrategy bought Bitcoin as a public company, and we went from, I think we were looking, we saw there were only like $2 million worth of Bitcoin in any public treasury anywhere in the world. And so we smashed through a barrier there in August of 2020. I think the Coinbase IPO was another big barrier. I suppose MicroStrategy, then Square's acquisition of Bitcoin, then the Tesla acquisition, and then Coinbase. These were all interesting milestones for Bitcoin adoption as an asset class, I think, because we saw this legitimized. And then, of course, all the macro hedge fund. Yeah, I feel like one interesting economic milestone we hit was just a few months ago when every government in the world acknowledged large amounts of consumer inflation, CPI and producer inflation, and it was acknowledged as an issue. I feel like a year ago it wasn't acknowledged, but today it is acknowledged. And probably the big economic driver that will continue will just be inflationary public policy. And if we acknowledge that we've got 5 or 6 or 7% inflation, there's no central bank in Western Europe or the United States that has articulated a plan to raise interest rates to 5 or 6 or 7%. So we're sitting in a zone for the next 3 to 4 years where it looks like we've got negative real yields, we've got continuing inflationary policy, and the discussion has moved into mainstream, the discussion of stagflation. And I guess what we saw, which was interesting in the past month, was we saw a crisis of confidence in the equity market, right? That brought, it used to be Bitcoin was a very volatile asset that may or may not be an inflation hedge. And now equity looks like a very volatile asset that may or may not be an inflation hedge. And so you've got the mainstream apparatus, mainstream media, mainstream investors acknowledging crypto and Bitcoin as an asset class versus property versus bonds versus equity, no safe haven, and a mutually agreed problem. And I guess one last point I make is I hear rumors from all my contacts that there's an avalanche of macro hedge funds coming into the space, setting up accounts, like an increase by almost an order of magnitude. It used to be there was 1 or 2 macro traders. And now I think a lot of hedge funds are setting up accounts, and their view is we have to trade this stuff. Whether or not they'll stand up and say, I want to hold $1 billion or $10 billion of it for a decade, well, we're still waiting for that. But it seems like at the end of the year, at the end of 2021, I heard all sorts of stories that, conventional macro funds yielded 3 or 4% ROI in the year, and crypto hedge funds had 500% returns in the year, and 200% returns, and some had 1,000% returns and 100% returns. So if there's anything that people understand on Wall Street, it's money. And someone made 10 or 100x as much trading that volatility. Whether or not I'm ready to marry this asset, I'm sure that I want to trade and I want to be engaged. I can't afford to ignore this. And that's kind of the message that we're hearing even from the big bulge bracket banks on Wall Street, that, basically I'll paraphrase them, this is not going away. Yeah, I mean, regulatory drivers and regulatory outlook. I think if you look at the market versus 2 years ago, 2 years ago, there was crypto and the regulators were too busy to deal with it. No one wanted to deal with it. And it was like a fringe thing. And I think that with the new Biden administration and with the new set of financial regulators, we had a lot of very crypto sophisticated regulators come into the administration. And Now, I think there's a consensus amongst politicians, both in the administration and the Senate and Congress, that the crypto economy is here to stay, that they need to master and figure out what this means to the future of the finance industry, maybe the future of the world. What does this mean to America? What does it mean to Western Europe? What does it mean to any country? The fact is the regulators now have it on their radar. That's the first important point. I think the second point is now, instead of just calling it all crypto or cryptocurrency, which is a misnomer, I think that people are realizing that what we have here is digital property, digital currency, digital exchanges, digital securities, digital art, digital commodities, and digital derivatives. And they're breaking this into a taxonomy. Like an NFT is digital art. Well, you know, a small token issued by a group of people is a digital security. A stable coin is a digital currency. Bitcoin isn't a digital currency. A crypto exchange or a DeFi exchange is an exchange. And so now you've got the question of what's the definition of every single type of digital asset? There's not one, there's many. How are we going to treat them? The answer is differently, right? And it crosses every regulator, the CFTC, Treasury, banking regulators, securities regulators. If we look back, playing our little milestone game again, what were the milestones that took place on a regulatory front? I think the fact that the SEC started to opine at all, that's a milestone. The fact that we seem to have, we've had a series of congressional hearings and senatorial hearings, and the consensus out of the hearings is that Bitcoin is property and not a security. I think that's a milestone. I think the denial of the spot ETFs and the approval of the futures ETFs, both of those are milestones in their own way. The approval of an ETF, and now we've got multiple ETFs to trade futures, was a milestone. I think that caused the CME to embrace trading of Bitcoin and derivatives and the like to a much higher volume than before. I think that's brought a lot more institutional money in the space. If you look at the testimony we've seen from various regulators, I think there's a consensus. The consensus that's forming in the past 6 months is the world has a demand for stable coin US dollars or crypto dollars. There's a demand, there's a use for them. I think that that's a consensus. I think that the world needs crypto property. That's a consensus in the form of Bitcoin. I think the benefits of 24/7, 365 high-speed trading is viewed as innovation. The need for clarity around crypto securities and crypto exchanges, I think that's a consensus. And the idea that the crypto exchanges will be brought into some kind of national securities exchange program, I think that is forming. It's becoming clearer that that's going to happen at some point. And I think the regulators have made clear that in the spot Bitcoin ETF denial, they made clear that they want crypto exchanges to adopt the principles and the protocols of a national securities exchange. And I think that's on the agenda for the coming year. So I think that all of those are kind of regulatory milestones.